So guys, I thought leo nionyeshe in fine details my assistants are how I pursue the financial markets. So my names are St. Kelvin Kalama on TikTok, on all social media handles, St. Kelvin Kalama. Find me also on YouTube as St. Kelvin Kalama. Subscribe to my YouTube content as St. Kelvin Kalama. I'll be dropping bombshells and I'll be dropping some game on how to navigate the foreign exchange or the forex markets. So this is the display of my trading charts, and on a daily basis, the first thing I do before I embark on a trading day is to check out my Forex Factory. So to a beginning trader, the Forex Factory is a tool that one checks for news, checks for anything related to the fundamentals of the foreign market. So whatever news is going to happen that day, it's usually displayed in the Forex Factory, be it high impact news, be it low impact news, be it medium impact news. It is displayed in the Forex Factory website. So it's a free tool to use, and it's actually the best tool to use. You can also use investing.com and other tools, but I highly recommend using the Forex Factory tool. So what I do, let's say today is the 12th of May 2025. So before I embark on this trading day, I check out for news, and you'll find that on this particular day, there was the yellow folder news. These are low impact news. You can find that there is the JBPY, news related to the JPY, GBP, the Euro, GBP, and the USD, of which there was the FOMC member, Kuglas, speaking, and the GDP, the Great Britain Pound. There was this member, Tyler, who spoke. And you can find that there is no a red folder news or a high impact news. So personally, my system regards trading during a no red folder news. So upon scanning for the news, when I say that there is no red impact news, or you can choose to filter out your news. Personally, I filter out my news. So the low impact, the medium impact, I filter them out. And you'll find that on this particular day, there's no red impact news. So this is it's a great trading day for me. So what I do is my chart. My chart is displayed in terms of the New York Open. So the blue lines you are seeing on your screen, this is the New York Open. So you'll find this. This is an indicator by Vic Skull. Someone with Skull. So you'll find this indicator. It's called the True Day Open. So it's a free indicator. So head out to your indicator zone. So you head out to your indicator zone and you search out the True Day Open by Vishal K73. So it's a free indicator to use, of which now, okay, let's delete out this. Let's delete out this indicator and So when you tap on this indicator, by default, it brings out these check boxes, of which these are signals on whether to buy or sell. But my system had actually customized this indicator to uncheck these boxes, these shapes, and check them. And I also increased the opacity of this indicator. And increase the opacity of this indicator. The color, I use and that also increase the opacity. Increase that opacity to 100%. So you'll have something like this. So this is the kind of indicator that I use. So if Monday the 12th of 2025 was my trading day, I'd actually hop into my charts and do the following. And I'd also and do the following. So I usually open up my trading view. So my trading view, this is the display of my trading view, and my most favorite pairs to trade is the USD card, USD against the Canadian dollar, and Bitcoin against the USD. So in crypto, I love trading Bitcoin against USD, and in Forex, I love trading USD against Canadian dollar. So those are my most favorite pairs, and those are the pairs that I back tested them using my system. So the kind of content, if you are going to use it to other pairs, I'd suggest you take some time in backtesting, backtesting that system. But I'd highly recommend if you use this system using the USD card and the Bitcoin against the USD, Bitcoin against USD. So those are my most favorites. I don't trade a wide range of pairs, Ethereum, Solana, and other kind. No, I just stick on two pairs. I mean, I stick on two pairs that I trade. So this is some game-changing information that I'm about to drop right now. So my chart, it is customized to the 15 minutes time frame, and you'll find that I have this blue lines of which I say that these are the New York to open. So in my time zone, or in the Eastern African time zone, this is the New York 12 a.m. is at 7 a.m. East African times. So this is the New York a.m. open, and this is the New York a.m. open. So you'll find it that it is extrapolated all throughout the trading view chart. So it is set out that kind of way throughout the trading view chart. So this is how I customize my trading view. The time frame is a 15-minute time frame, and I have my New York candle highlighter, New York 12 AM candle highlighter. So what I do is to realize where the most kind of volumes were traded during the previous trading day. Hear me out. So let's say today is the 12th of May 2025. Today is the 12th of May 2025. So with my chart open like that, like so, and my candle New York 12 AM candle highlighters open too. And hope there is a tool called the fixed range volume profile. The fixed range volume profile is a tool that shows you where the most amount of volumes are traded during the previous day in a chart. So it's found under the long short positions, or the long shorts, where you'd apply your SL, your TP, your long and buy position, your long buy positions, your short sell positions. So that tool is situated down. So you'll actually map out that tool, and you'll hop into your charts, and you'll map out that tool at the beginning of the previous day, at the open and at the close. So let's say 12 a.m. So let's say we're on Monday, the 12th May 2025. So I'd be using the Friday. So I'll map out that tool, and I'd extend it towards the other blue line, I mean the close or the open or whatever, and ensure that you are accurate in the display. Ensure that you are accurate in the display. So when you place that tool, it shows out like so. So let's focus on this trading day, right? So when you place out that tool, it shows out like so, right? So the strategy is you buy below so this area where there is a white line in some charts, or in a light green chart, this will be in dark color. So this horizontal line, it is an area of confluence where there was more volume traded in that the trading day. So on the on the 9th of May 2025, this was the area where most volumes were traded that day. So our strategy is you buy below that zone. You buy below that zone. So I buy below that zone, and you combine this strategy using price action. You combine this strategy using price action. So I'll be showing you different price actions applied in different market conditions using this strategy. So let's say today you are trading a continuation pattern. This is a continuation pattern, right? A continuation pattern meaning we are in an uptrend. So this is an uptrend. This is an uptrend, right? So we'll be trading a continuation pattern. So meaning today we'll be looking for buys. So to have an A+ setup, look for buys in an uptrend, look for sells in a downtrend. So here's our system. Let's get tactical in our system, right? So this is the open of this trading day. This is the open of today, the Monday the 12th, 2025. This was the open, and so the market it traded below, right? It traded below, and so we'll be looking for buys. So in a continuation pattern, wait for the previous low. Okay, in an uptrend we have highs, we have higher highs, higher lows. In a downtrend we have lower highs, lower lows, right? So when trading an uptrend, you wait for that lower low, that higher low to get taken out for you to trade a continuation. So it's something to do with a liquidity sweep, right? So the market was here, then it traded to here, and then we came for a liquidity sweep, taking out this low. Taking out this low. The market traded here, it drove up, but then it came to take out this low. This low, right? This is a low, okay? In an uptrend, this is a higher high, higher low, higher high, higher low, higher high, higher low, right? But then this market came out and took that liquidity. So it drove and came out and took this liquidity zone here. Okay? So we wait for, while trading a continuation pattern, wait for this market to take out this higher low for an uptrend. Wait for the market to take out a lower low for a downtrend. Stay with me. So this was a good entry point. Yeah, this was a good entry point. So this was a good entry point here. This was a good entry point. So this was a good entry point, and personally it will be easy to give you a 1:3, but trust me, I'll also be giving you some insight for information. So keep watching. There's an insight tip that I'll be giving at the end of the video. So this was a good trade. This trade would have given you a risk to reward a 1:7 or 1:7. A 1:7 risk to reward, of which, if at the open of New York 12 a.m. or 7 a.m. East African times, if you would have placed an order here, I mean a buy limit order, a buy order, this order will have been executed, and let's say you place 100 ticks stop loss. So this is your entry. So you place your orders below this low, your buy orders, and trust me, they are always tagged in, because the market should, and it must come out for this liquidity. So combining with price action, this strategy is usually effective. So it usually tags, and it's going to give you an it should give you a 1:7 risk to reward. And for each trading day, so the game kicker or the takeaway in this chart is that on trading days, on a no red folder news trading day, the market follows one trend, be it the London, be it the New York. Hear me out. For every trading day that there is no a high impact news, the market trades in one direction. But when there are high impact news, the market seeks liquidity and other kind of imbalances in the market. So be guaranteed that when there is a no impact news, it's going to be a high probability, or if you are going to trade that day, you can hold that trade during the London and during the New York trading period. So that is my strategy. And if you're going to trade a reversal, let's check out for a point in the market where the market reversed. Let's seek out this zone, of which this zone is the 5th of May 2025. The 5th of May 2025. So we'll map out our fixed range volume indicator in this day. So we'll be precise with the markings from 7 to 7. Right? From 7 to 7. Okay? From 7 to 7. So those are our markings. Yeah? So that market, as you can see, let me enlarge the screen. That market, as you can see, the low on Friday the 2nd, the low of Friday the 2nd 2025 was taken out, and you can see that this was a good entry position for buys. This was a good entry position for buys. So combining this strategy using price action, you can find high quality setups. So this was another great entry position. So while trading reversals, you wait out for the low of that day or days to get taken out. While trading continuations, when we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, while trading continuation, you wait for the low to get taken out. You wait for the higher low to get taken out so that you can trade a continuation pattern. But while trading a reversal, you wait for that low of that day. So this was the low on Friday. This was the low, and this was the low on Monday. So while these two lows were taken out, it would have been great zones to start placing out your buy positions. Buy positions, but you don't trade a continuation pattern yet, a reversal pattern yet, until you notice a market structure shift. So while this low was taken out, yeah. So there was this week that took out this week. So while trading reversals, wait for the lows of the days to get taken out first. The lows of the day to get taken out first, and you can start stacking up your buy positions. Maybe for an uptrend, where you're anticipating an uptrend. So this was a nice entry point. But not yet until you see a valid market structure shift. So this was a valid market structure shift right here, and you wait for a retest of that zone, and you can. So this was it. So the low of Friday, the 2nd May 2025 was taken out, and the low of Monday, the 5th May 2025 was taken out. So when you see that kind of rejection or that weak rejection, wait for a valid market structure shift, and you can start. So personally, I'd be waiting for this zone. So this will have been my entry point, and this will have been my entry point. So my stop loss will be at the end of this week. My stop loss will be at the end of this week. This one. And personally, I target a 1:7 risk to reward. Come on, let's see if we will have achieved that. A 1:7 risk to reward. A 1:7 risk to reward. So I'm this person who trades my setups. Okay, my system allows for one setup during a week. So this week, one setup. The following week, one setup. Let me show you. So each week, I choose only one A+ setup, and I actually hold it for a maximum of a 1:7 risk to reward. So I'm this kind of a person who sometimes tries to flip, and let's say maybe I'm trading a $50 account. I place my positions, I stack more. When the market is heading downwards, I buy more. When the market is trading upwards, I sell more. So me personally, I'd be looking to place more buy positions here. I'll be placing more buy positions. So you see in this red zone where I had I'd be looking to place more buy positions. So this is what I'm trading. This is the reversal trades that I take. But for continuation patterns, for continuation trades, you wait for the previous adjacent low to get taken out. I mean, for a higher high, higher low market pattern, wait for that higher low to get taken out first and stack out your buy positions. For sales, when that lower low gets taken out first, now you can start stacking out your sell positions. That is a continuation pattern. But for a reversal, wait for the low of the previous day or days get taken out first and wait for a valid market structure shift, and you start taking out your positions in the opposite direction. So I hope this content is informative. Drop out your. So I'll also be explaining this trade that I took out someday. So explaining it using my system. So this trade happened out during the Tuesday 22nd April 2025. That was on a Tuesday. So this was the market condition that so you can see from this market condition, this is a downtrend from 15th, almost 21:15 East African times. This was a downtrend towards Monday 21st April. That was a downtrend. But since I wanted to trade a reversal, right? I had to wait for these lows. So the low on Friday was taken out, and I saw a weak rejection, right? A weak rejection happened here, and I waited for a valid market structure shift. Waited for that market to tap out in the zone, an imbalance zone. So this was an imbalance zone right here. So I waited for this market to come and tap that imbalance zone. I would have placed, I actually placed my buy positions here. The same setup gave us a continuation on Tuesday. It gave us a continuation on Tuesday. If you will have missed this setup, wait for the next imbalance to get formed. Wait for that market to tap out that imbalance and place out more positions. So if I would have missed this trade on 21st April 2025, I would have also gotten that trade towards Wednesday 2025. So this is a reversal trade that I also took. This is also a continuation. This is also a reversal trade that I also took. So I have explained this strategy in two market conditions, the reversal trades and the continuation trades. The reversal trades wait for the lows of the day to get taken out first, while the continuation trades wait for the lower lows or higher lows to get taken out first and trade a continuation. So the strategy is buy below the zone where there was a high volume in the market, and sell above the zone where there were high volumes in the market. So go back, test this strategy. If it suits you, use it on the USD card. Personally, it works for me using the USD card. If you are going to use this strategy using gold, I suggest you get more data first and more chat time, and use this strategy. You can also tune that strategy to your advantage. So if you're going to use this strategy in other pairs, try to get more chatting time first before implementing it in the market. But me personally, I acquired this strategy using the USD card and the BTC markets. So if this type of content suits you, and if you found some sort of value in this type of content, I would really much appreciate if you subscribe, if you give me a follow in my social media handles at St. Kelvin Kalama, and if you actually liked this video and shared it to any of your trader friends and anyone who is looking to start out in Forex and trading in particular. Thank you. Peace out. Boom.